You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
Welcome to Options Playbook Radio. I'm your host, Brian Overby, Ally Invest Senior Options Analyst and author of the Options Playbook. All right. Well, last week we just went through some strategies that you might want to use to clean up your portfolio of stocks. Covered calls are something that I always like to talk about at year end. You're targeting a stock that maybe you have a gain on and you want to take that gain before year end to offset some losses in your account that happened in 2022. Or the exact opposite. I want to do this trade and I have a loss that I want to take in 2022 as opposed to next year. Target those stocks, especially if you have 100 shares of that particular underlying, and sell a call to try to bring in some income above and beyond the revenue that is generated from the sale of the stock. Very simple, very straightforward. Not too much to say there. We looked at a trade in Amazon. You can pick whatever underlying you want to apply that to, but the holidays, actually starting in November, right around Black Friday and the shortened trading weeks, is the season to be thinking about covered call selling. I just really like to do it in these time frames. First of all, the seasonality kind of holds true in December. We get through September and October, which are usually rough months for the marketplace. And then we get into November and December, which are usually a little bit better months overall. And it has a lot to do with just the hype around the holidays and Black Friday sales, et cetera, et cetera. So that was the trade last week. We're not going to digress and look at it too much. Amazon is up since we talked about it last week. I guess that's worth noting. Last week, Amazon was right around $88, and right now I see it today closed at $91.58. And I should tell you what today is. Today, we are taping Options Playbook Radio. It is December 14th. The markets are closed at this point in time. So we're coming into the holidays. And because of that slower time of year, I just want to do a real quick trade, a highly speculative trade. We had a lot going on in the markets this week. CPI number, the Fed is, I don't even know if they're done speaking yet, but Mr. Powell had a lot of words to say about the CPI, about where his hawkish tone is at. He was kind of a Grinch today when it came to interest rates and what they're looking to do going into the new year. So their tone has not changed, even though some people were getting a little bit excited about the concept after the CPI number that maybe the terminal rate, which is the rate where the Fed would push the Fed funds rate to, and that terminal rate right now, they were anticipating that it might be 4 3/4, maybe even 4.5 were some of the whisper numbers. Mr. Powell came out and confirmed that it's very plausible that they're going to look at 5.15%. That was the average consensus from all of the people in the Fed meeting. And he reiterated that that is a very high probability. Markets tanked. Markets came back. Markets tanked. Markets came back. And we finished the S&P 500 with the S&P 500 down 24 points on the day, or just a little bit over 0.5%. So that's where we're at. So what are we going to do about this? I think in general, the news has been good. I was kind of hoping that Mr. Powell would have a smile on his face when he was talking about 2023. He did not. So I think the markets took most of what was said negatively, even though the numbers, in particular the CPI number, was really solid. It's the reiterations of a lot of people thinking that we may have hit the peak in inflation happened this week, and the CPI number made that argument good. So that's where we're at. We're going to get bullish. We're going to get very bullish. We're going to get very simply bullish on a very short-term trade. So I'm looking at the SPX. I like to look at bull call spreads in the S&P 500 index whenever we have the VIX index trading north of the 22-23 level. Right now we see the VIX came off a little bit today. It's at 21.14. So, in this day and age, low volatility, I think I put that number around 20% prior to the pandemic. Low volatility to me would have been around 15% on the VIX. So higher volatility makes some spread trades a little bit more interesting than periods of low volatility. And part of the reason why is that there's so much premium that is in the option contract that you're selling, especially when you're dealing with when you're dealing with expensive underlyings like the S&P 500 index. So the S&P 500 index closed at $3,995. Guess what? We're going to sell that option contract. We're going to go out to the December 16th expiration, which is this Friday. So we're going to have a very short and sweet trade. And we're going to sell the 3,955 strike call. That option contract right now, with just a few days remaining to expiration, 2 full days, we're looking at all day Thursday, all day Friday, and that option contract is trading on the ask at $36.20. That would be a very hard option contract to buy, considering that that all that time value has to go away by Friday. So we're not going to buy it. We're going to sell it. And then we're just going to jump down to the 3,990 strike, and we're going to buy that one. And we're just going to have a very small bull call spread done for a decent price. We're looking at a 5-point wide spread, and we can pay $3 for it on the midpoint. Now, the markets are closed right now, as I mentioned, but we have 2 different scenarios here that this trade pans out. The market's at 3,995.32. If it just stays where it's at, this trade could receive the max profit. If the market goes up, it could receive the max profit sooner than later. And the max profit on a 5-point wide spread is $2. So the math is really simple because of where the midpoint is on this trade. The midpoint is $3. We have a 5-point wide spread. The maximum the spread could trade for is $5. 5 minus 3 is $2. So if the market actually goes down a couple of points and finishes around 3,993, which is a couple of points below where it's at, this trade breaks even. That's where the break even is at. So we're doing a long call spread, a debit spread, paying a net debit at the midpoint of $3 plus commissions. And we're doing this as a time positive trade. So we're buying less time premium than we're selling because we're selling the most at the money option contract. This is in the S&P 500 index, so we don't have to deal with stock. Everything is cash settled. We're going into the year end. There are some tax benefits of doing index option trading. It's called the 60-40 rule. Look into it. Also makes it interesting. So with all that said, this is a short-term speculative trade in the S&P 500 index. And we're doing it because we're coming into the holidays, and basically I'm not going to pay attention to my account after we get the Christmas holiday going into the New Year holiday. So very straightforward. So let me reiterate. Here's what the trade is this week. We're looking at a long call spread in the S&P 500 index. We're going to be using the December 16th weekly expiration. That means it expires on the close on Friday. We're going to be buying the 3,390 strike call and at the same time selling the 3,995 strike call. We're looking to pay a net debit of $3 to the account plus commission. That will also be our max risk. Our max upside would be the width of the spread, $5, minus the net debit paid, which is $3 or $2 on that trade. And we have 2 full trading days, and we really just need the market to stay where it's at, above 39.95. And that'll be it for this episode of Options Playbook Radio. If you have any questions you'd like us to try to answer on the show, you can email them to me directly at theoptionsguy@invest.ally.com. If you would like to know more about what we're doing here over at Ally Invest educational-wise, please follow me on Twitter. My handle is @BrianOverby. Thanks for listening. Be in the same time, same place next week. Until then, may all the options you buy finish in the money, and all the ones you sell finish out.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.